Hey everybody, it's Eric. Welcome back to the channel. The market is continuing to sort of pull back here, and we are starting to break below the moving averages. And at this point, a lot of our trend following strategies are going to be on pause for a few days until we recover. Hopefully, we'll recover because it's easier to make money when the market's going up, obviously. When the market's going down, the VIX usually spikes. And we can see that the last time the market pulled back, we had that big drop about a month ago. The VIX spiked and got all the way up into the high 20s. I don't know if we're going to get there again, but it looks like it's ramping up here. So I'm really waiting for a really big VIX spike move, something that looks more like this. And when that happens, volatility obviously has expanded and the options prices are more expensive. And therefore, we can get a pretty wide iron condor. I like to sell iron condors in more high volatility markets, at least for the indexes. And so I'm pricing this one out right now. This is about 2 weeks expiration. I'm looking at the November 21st, a 69.50, 69.60 call credit spread. That would be above the recent high, and the 65.50, 65.40 put credit spread. This is right about the recent low where we had that previous sort of pullback. Let me show you what this looks like in the brokerage platform. Again, not taking this trade yet. It's just something I'm pricing out. We're trading right about in the middle of this range. This is a 10 wide on the wings. Right now, I can get a credit for a little bit over 320. Let's call it 325. I'll lock that in real quick. And then that makes the max loss 675 because with 10 wide wings, you take $10 minus the credit, in this case, 325, and that would be your max loss. So this is the most we can make. This is the most we would lose. I typically manage these a little bit differently. If let's pretend I entered today, I would look for probably a third, let's call it 30% profit taking. So if I could get $3, I'd try to close it out at $2, give or take. The other thing that you can do too, and I do this a lot because if we took this trade today and the market spiked lower, this call credit spread is going to be worth very little. So I could simply buy that back, and then if we bounce back up, take profits on the other side. If we don't, could sell a new call credit spread a little bit lower and use that credit to roll the put credit spread down. So that's kind of how I think about that. But in general, if the range holds and you don't feel like we're getting blown out or anything, then I'll just look to take profits. Like I said, let's call it 30%. So right now, this spread is 325. Again, I'm going to be waiting until maybe we spike a little bit lower. If we get back above the moving averages, I might just wait because we'll have our other short-term strategies in play. But that's what I'm looking at. Let me know what you think about this Iron Condor in the comments, and I'll see you in the next video.